This is Eric Muathe with Muathe.com. Let's take a look at a stock here, MSON, which is showing a breakout attempt. And this is towards the end of February 2019. Here in the pre-market, before we go into the last trading day for February, as you can see, pre-market action. Right there. Central Time, US. Alright, let's take a look at this stock, which is, as I said, showing a breakout look. We can see here it is moving above the prior monthly closing high of 1970. So as long as the stock is holding above that level, you can give it the benefit of the doubt that it can move higher. You'd also want to insist that the RSI remains above 69.1. As of right now, it meets the minimum requirements for our breakout because the MACDs are showing a move to multi-year highs. So meets the minimum requirements with the RSI and the MACD. Everything checks out. Now it needs to defend 19.70. So in other words, if there is a failed breakout and it moves back below 19.70, then that would be a solid reason to get out of this trade if this fails. Now again, this is a 3-year monthly chart. I want to show you why I think, in my opinion, this has a high likelihood of failure. In other words, in my opinion, I want to show you why this breakout here is suspect. Number one, take a look at the long-term monthly chart. We have a well-established history of rallies that end with steep drops. A rally here, steep drop. Rally here, steep drop. You can see this has been going on for many years, going back to the 90s. You go up, give up all the gains, up, give up all the gains. So this has been the pattern. It's well established. In my opinion, I don't see what changes. This is one of the red flags we look for when we are trying to find quality names to own. And you can see even recently went as high as 21, went back all the way to 13, now it's back to 21. So as you can see visually, this does not tend to hold on to gains. So what can one do? Well, what you can do is very simple, is just use the recent breakout levels, for example 19.70, or you can also use the weekly breakout as a gauge. Again, the level here is the same as the monthly at 19.70. As long as it's holding above this price, you can say, you know what, I'm going to give it a chance. But given the pattern over the last, let's call it 20 to 30 years, it has failed to hold on to gain. So any movement below this price is a sell. By the way, notice how we made an improvement in prices here, but our RSI has not shown any improvement. In other words, this is definitely negative divergence, suggesting again another look, another possibility of a reason for a failed breakout. Now this is the weekly chart. So 19.70 on the weekly, failure to hold above that level means one can get out. If you take a look at the daily, we can see that the daily is failing to hold above the prior daily closing high. In other words, the daily breakout is already failing. And that is based on 20.50, which goes back to this daily closing high. So already we see a failed breakout here and a pullback. Now we see another failed breakout. So as long as the stock is trading below 20.50, this definitely, in my opinion, is a stock that is due for a major reversal based on what we are discussing here, plus a history of failure to hold on to gains. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ESCS.